Jerry, good to see you. What are your thoughts on this turnaround today? Counter trend, new trend?
Well, first, let me point out, I'm one of the people that just bought a new electric vehicle.
Tesla?
I may join you.
I'll give you a link to one real quick, Tyler. Things are on day, off day, up, down. This is the new normal until there's a better way of portfolios holding the risk profile that's consistent with where the world economy is. If I could take a second, it's been 15 years now since the word inflation was ever even thought about by asset managers in this country and in the global economy. We never had to think about it. We felt there was always an abundance of cheap oil, cheap copper, cheap, pretty much everything. And we were able to just buy growth companies that got greater and greater valuations. We're not done in the transition away from a single source of return in portfolios. And we're just beginning, before the Ukraine issue, we're just beginning to look at maybe a more balanced portfolio that accommodated new sources of inflation, new sources of global growth, along with these great growth businesses. So we were in the beginning phase of that, and now this war hits us right in the middle, and we're still very unbalanced. And the question is, why do you see this kind of volatility? It's because you still have portfolio managers that are hoping for lower interest rates, others that are trying to find a new way home in an inflationary environment. And the two forces compel each other to go back and forth a lot. And that's way before we get into the dynamics that we just talked about in the oil markets, which I think everyone should be aware of and maybe take a little pause.
Sure. Although, and by the way, did you just happen to buy an EV, or was it literally because of the oil price spike?
Honestly, when you look at, we talk about the physical market for oil, nothing can convince anyone that when you pull, the biggest producer off the market, the non-OPEC producer like Russia, you could have gas lines in a month if we don't resolve some of this supply-demand stuff quickly. And that's the other aspect of, I honestly think investors today think this is a, quote, supply chain problem.
Yeah.
They are missing the point. This is a supply problem, not a supply chain problem. There's big supply chain problems too. Even if all of a sudden China took all of Russian oil, it would take months to redirect those flows out of the Arctic. It's just not that simple. And if you really touch this thing with a supply issue like this, you have a big risk.
It's so fascinating, Jerry, because again, this is all kind of a side chat from your investment recommendations. But my husband was, we went and filled up a bunch of our gas tanks because he had the same concern, which was if we saw people react by trying to put price caps or some sort of quota system in place, and now we look at a day like today and go, oh, forget it. Maybe it's all over. But I think what you're saying is that kind of like what Halima was saying a moment ago, we have no idea where this is going from here.
No, you don't. And it's so you can't double or use the semiconductor example. Companies just double order. Auto production goes down. You can't double order next winter's heating supply. You can't just decide not to buy a gallon of gasoline if you need to get to work or you need to drive your kids to school. This is real time and getting shorter and shorter time frame before we need a solution. And I'm not saying it's by any means panic. But let's go to the other side. This is a very attractive market overall. We've had a huge correction, and some of the growth names is 20, 30, 40%. So we have very attractively priced stocks broadly. But this particular problem has to have some resolution to it. And unfortunately, it has to happen in the next 4 to 6 weeks.